Bitcoin is more than just a lousy investment or a speculative bubble. Even worse, it's a complete scam. Coinbase has gone public, and Wall Street seemed enthusiastic about it. A cryptocurrency exchange like Coinbase enables you to purchase, store, and exchange cryptocurrencies, invented forms of the alternate currency. Bitcoin and Ethereum are the two that are the most well-known of them, but there are 4,000 other varieties of these newly created forms of money. So today's topic is why cryptocurrency is a giant fraud. If you want to know more interesting facts like this video and tap the subscribe button, let's get into it. Given that cryptocurrencies don't create anything with tangible worth, this massive resource waste turns the entire industry into a zero-sum game. The only way for investors to profit from their investment is by selling their coins to the other investors, but only after the miners and other cryptocurrency service providers have taken their cut. In other words, because cryptocurrencies are inefficient by nature, investors cannot overall cash out for even what they invested. Because of this, they are a dismal and expensive method of payment and are utterly absurd as long-term investment. If the increasing price of the Bitcoin and other cryptocurrencies were merely a result of the increased demand, we could write them off as a failed experiment in the greater fool theory of investing, which holds that investors should try to profit from the overhauled or even worthless assets by selling them on the next greater fool. The launch of the Coinbase on the stock market, dubbed the crypto event of the year, and the coming out party for crypto was successful. According to CNN, both the cryptocurrency economy and the enterprises that have sprouted up to support it are greatly validated by the avalanche of the investor interest. According to Vox, the success of the Coinbase demonstrates that Bitcoin has evolved from a nerdy curiosity into a mainstream investing possibility and payment mechanism, and that you should probably start paying attention to it. The New York Times claims that Bitcoin, which was formerly disparaged as a tool for criminals and careless investors, is creeping into the mainstream. It's a good idea if we attempt to comprehend what it is and what its economic ramifications are if it is currently widespread and we should pay attention to it. You may be kicking yourself for ignoring Bitcoin because its proponents are some of the most irritating people on the globe. Nevertheless, if you had listened to the first person you met who introduced you to it years ago, you might now be a millionaire. Scammers are constantly seeking for new ways to steal your money, and the recent explosive growth of the cryptocurrencies has made fraud more common. According to a report by the blockchain intelligence company Chainalysis, thieves stole $14 billion worth of the cryptocurrency in 2021, setting a new record for the cryptocurrency crime. It's crucial to be aware of the risks if you are interested in the cryptocurrencies. Cryptocurrency scams come in a variety of forms. The most typical examples include: in order to deceive their victims, scammers may develop phony cryptocurrency trading websites or imitations of the legitimate cryptocurrency wallets. These phony websites frequently have domain names that are somewhat similar to those of the real websites they are meant to imitate. It can be challenging to distinguish them from the authentic websites since they resemble them so closely. There are two main ways that fake cryptocurrency websites work. Pages that are phishing. The scammers get their hands on all the information you provide, including your crypto wallet's password, recovery phrase, and other financial data. Comparable to simple theft, you might be able to withdraw a little sum of the money at first through the website. You might increase your investment in the site as your current investment appear to be doing well. However, the site either closes down or rejects your request when you later wish to withdraw your money. Online wallet information is a common target of the cryptocurrency phishing scams. Private keys for the crypto wallets, which are needed to access the wallet's funds, are the target of scammers. They operate in a similar way to previous phishing scams and are associated with the fictitious websites mentioned above. To entice recipients to a specifically designed website where they are asked to provide private key information, they send an email. The cryptocurrency in those wallets is then stolen by the hackers once they know this information. Pump and dump methods frequently involve con artists hyping a particular coin or token using email blast or social media like Twitter, Facebook, or Telegram. Tradesmen hurry to purchase the coin because they don't want to miss out, which raises the cost. After successfully driving up the price, the con artists liquidate their shares, which leads to a crash as the asset's value rapidly drops. This can occur in a matter of minutes. Scammers frequently use bogus apps that can be downloaded from Google Play and the Apple App Store to deceive the cryptocurrency investors. These bogus apps are swiftly identified and taken down. But that doesn't mean they aren't having an effect on many bottom lines. Numerous people have downloaded phony cryptocurrency applications. To entice potential targets, cryptocurrency scammers occasionally adopt celebrity, corporate, or influencer persons or make claims about endorsements from these individuals. These occasionally entails marketing fake cryptocurrency to unsophisticated investors. Sophisticated websites and pamphlets that purport to have celebrity endorsements from well-known figures like Elon Musk are sometimes used in these scams. Fake giveaways. And what is known as giveaway scam? The con artists here claim to equal or multiply the cryptocurrency handed to them. Clever messaging from what frequently appears to be a legitimate social media account can engender a sense of legitimacy and urgency. People may send money rapidly in the hopes of receiving an immediate return, because this opportunity is supposedly a once-in-a-lifetime chance. Blackmail is another technique scammers employ. They send emails threatening to reveal the user's history of visiting adult websites unless the recipient shares their private keys or transfers money to the scammers. Cloud mining refers to businesses that let you rent mining equipment they run in return for a set charge and a percentage of the profile you will allegedly make. Periodically, this enables anyone to mine remotely without investing in costly mining hardware. In contrast, a lot of cloud mining businesses are frauds or, at best, unproductive, causing you to lose money or make less than expected. Initial coin offerings, or ICOs, are a mechanism for budding cryptocurrency businesses to solicit funding from the potential customers. Customers are frequently given the option to send active cryptocurrencies like Bitcoin or another well-known cryptocurrency in exchange for a discount on the new crypto coins. Many initial coin offerings have proven to be fraudulent, with criminals going to elaborate lengths to deceive investors. Examples include renting out fake offices and producing upscale marketing materials. All companies market themselves, but investing heavily in marketing like as internet advertising, paid influencers, offline promotion, and so on, is one way that cryptocurrency scammers draw people in. This is intended to reach as many people as possible in the quickest amount of time and to quickly raise money. Consider stopping and doing more study if you think a crypto offering's marketing is pushy or makes grandiose claims without any evidence. It should be possible to identify the primary individuals behind the majority of the investment businesses. This typically entails accessible bios of the investment's managers as well as vibrant social media presence. Be wary if you can't identify the owner of a coin. Any investment opportunity that claims to offer free money, whether in fiat currency or cryptocurrency, is likely to be a scam. You need a wallet with private keys if you want to invest in cryptocurrencies. It's quite likely a fraud if a company requests your keys so you can take part in an investment opportunity. Secure the keys to your wallet. Sending a small quantity of the money the first time will allow you to verify the reliability of the cryptocurrency wallet program. If you observe strange behavior while updating your wallet app, stop updating and delete the app. Scammers frequently employ high-pressure techniques to get you to invest your money right away, such as making bonuses or discounts if you do so right away. Before making any purchases, take your time and do some independent research. Crypto scammers frequently advertise their fraudulent schemes on the social media. They may utilize unlicensed pictures of the famous people or prominent entrepreneurs to give the impression of the credibility, or they may make promise of the free buys or free money. When you see cryptocurrency prospect touted on the social media, keep a healthy dose of skepticism in mind and conduct your research. It's probably a fraud if someone reaches you out of the blue offering you a chance to invest in the cryptocurrencies. Never give anyone who contacts you in this way your personal information or money. The most well-known cryptocurrencies are legitimate. However, if you have never heard of a specific cryptocurrency, do some research on it. Check to see if there is a white paper you can read, learn who runs it and how it functions, and look for real reviews and endorsements. To check for scams, find an accurate and reliable list of the bogus cryptocurrencies. Companies that guarantee returns or promise to make you wealthy overnight are probably scams. Be cautious if something sounds too good to be true. Last but not the least, never use money you can't afford to lose on an investment opportunity. Understanding the risks is crucial because cryptocurrency is speculative and volatile even if you aren't being scammed. The information that cryptocurrency scammers have obtained is frequently sold to the other crooks. Therefore, it's imperative to update your usernames and passwords on all of your accounts in order to stop additional harm. You can report a social media crypto scam to the appropriate social media network if you become a victim of one. You can report frauds to the appropriate government agency in your area, such as the Federal Trade Commission in the US, depending on where you live. There are counterparts in other nations. Time to wrap up the video. Do mention your favorite part in the comment area. Share this video with your friends and family. Have a great day.